Hey, good morning, everybody. Good morning. How's it going? Probably should turn on some lights and make myself look a little bit better here. And there we go. There we go. There we go. All right. Let's see. Philip, Infinity, Jason, PD, Larry, David, Arturo, AV. Don't recognize your name, but hey, welcome. Michael, Mark, Sergio, Francois, Ed, Michael, Craig, Gary, Donald, uh, Suzuber? Welcome, everybody. If you want to chat, hey, General Rush. And if you want to chat with everybody on the stream, click the button right over, let's see, right down here. Um, Different setup since I'm at home. Um, Click the button right there. Be a subscriber of the channel. A few seconds later, you can start chatting with everybody, and me included. Remember, today is Tuesday. Tuesday has 30 minutes of awesome coming up at 5 p.m., where I take your request for at least 30 minutes. To make a good show, I got to have people show up and make requests. So make sure that you set your reminder on your phone and come tune in. Come see me later on. Uh, Remember, 5 p.m. Eastern, I'll be live. And today is a snow day yet again. We got crazy 10 inches of snow. We're right here in Knoxville, Tennessee, kind of in the valley, what they call the valley between the Smoky Mountains and the plateau. And we got more snow in Knoxville than they got in on the plateau and the Smoky Mountains combined. Like, you add those snow totals on either side of us, we got more snow right here. They were saying 10 inches last night. I have a picture I posted in Discord of 9 inches right before it got dark. It's crazy. Uh, Last time it snowed like this, 1993. 1993. I was like in 8th grade. That was a long time ago. Anyway, so good morning, everybody. And I'm kind of stuck here for. I'm not really. I don't feel like wrecking my truck or anything like that. This is not a town where we have snow plows. I mean, we have a few. We have some ice. What are they? Salt trucks, a few, but we don't really have enough to go clean the roads. Like, that's not something that happens here very often. Um, so I'm here, not at my office. So that's why this thing right here. And yeah, I'm just a youngster. That's Anyway, um, my voice yesterday. I did 2 back-to-back webinars yesterday, and my voice a little gravelly today, but got another pineapple gold monster here. So let's pitter patter. Let's get at her, shall we? Let's talk about what's actually happening today in the markets. I got some stuff to show you, and I guess I should pop it up before I get to that point. So give me 1 second, and then we can actually talk about it. So I should just go ahead and pop them all up, right? Yeah, just pop them up, and pop them up. That way I can actually talk about them. All right, there we go. And pop it up. So all trading involves a substantial risk of loss. Before we get into this, past performance not necessarily indicative of future results. That means I may never get this sucker right again. Okay, just because I predicted stuff in the past and it came true, including the whole Bitcoin spot ETF, it pretty much unfolded exactly like I thought it would. This presentation is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell any financial instrument. So if you desire personal financial advice, hire and consult a financial advisor. All right, what does that mean? It means don't buy stocks, don't buy options, don't buy futures, don't buy Forex, don't buy cryptos, don't buy bonds, don't short them, don't get into them, don't trade them. There's Kimberly. She must be in the back of the house. She's not in here, sitting here today. So don't get into them. Don't trade. And certainly don't buy stuff from financial gurus if you don't trust them. All right? That's a big thing. That's why I do this every single morning, to try to build some trust. Because, hey, let's face it, there's a lot of crooks, snakes, and people out here just trying to make your money their money. If you don't, if think about that later. If you're hiring somebody to take care of your money, they're probably trying to take your money and make it their money one way or another. And they may not care how much losses you incur in the process with their fees or whatever. We're kind of seeing that with the Bitcoin spot ETFs a little bit. You know, some of those ETFs have ridiculous fees. And I was talking about that yesterday. So if you missed the show yesterday, probably pretty beneficial to go watch that about the Bitcoin spot ETFs and see some of my opinions on it. Anyway, calendar for this week. Pop over, hit that really quickly. Here we are, coming in on Tuesday. Yesterday, Martin Luther King Day, and closed for the U.S. Around the world, not really so much closed. We had the futures open till 1 p.m. and they were kind of soft. And we're seeing more selling off this morning as, surprise, surprise, the odds of a rate cut keep dropping for March. I mean, we haven't even gotten through the first FOMC meeting at the end of the month, let alone get down to March. But already that rate cut dropping. QT, kind of, the quantitative tightening that they're doing right now, they're looking at that kind of easing up, maybe cutting back on that some. And there's not a ton, on this financial calendar here. We got Empire State Manufacturing today, hit the market already. Tomorrow, we got core retail sales, not typically the biggest mover. Thursday, we have unemployment claims, we got building permits, we got Philly Fed, housing starts. Not big market movers yet again. And then on Friday, we have consumer sentiment. Seems like we get that almost every week lately. We get existing home sales and inflation expectations. That one might move the market a little bit, depending on how that comes in. So, grand morning, good to see everybody. Mr. Keith, Mr. Brian, Mr. Sledge, glad to see everybody thrifty nifty. Welcome everybody to the stream. So if you want to chat, again, if you want to chat with me like all those fine people, just click subscribe on the channel. And if I say anything that is beneficial along the way, give me a thumbs up. Give me a like on the channel. Click down below. And if you want to come join me later, I do this all day. So if you want to come join me later, click the more button down below in the description, expand it out, and there's a link for $5 to come join me in Discord. So right here, check this out. You know I love statistics, right? Anybody that's been here for very long, I like to kind of see what the historical performance, surprise, surprise, we kind of do the same thing every year. Not exactly the same, but a lot the same year after year after year. In the markets, we tend to do kind of the same stupid stuff. Last year, MLK week was a big downer, actually. We saw the market pulling back about 6%. 2 years ago, 2 years ago, back in 22. I'm already not on 24. 2023, we saw a small pullback. The median is about a 0.3% pullback. We're only up about 38% of the time during this week. So this is a week to be a little more cautious. That's what that says right there. That's what that tells me. This is a week to be a little more cautious on being aggressively bullish. Now, does it mean we're getting a big pullback? No, it doesn't mean that we are. The charts kind of tell us that. So, but right now we're already starting out a little soft. We got 4 trading days to go. The market opens in about 7 minutes, and we'll see. All right. So this doesn't even cover all the way back to the last time it snowed this much in Knoxville. So, but it does cover almost my entire trading history. So there we are. Any questions? Moving on. I thought this was interesting, and I'm going to zoom this around just a little bit right here. So what we have here is the U.S. 3-month Treasury coming in with the red line across there. We're roughly 5.25, roughly in there. And then these are various places where you can park money. From municipal bonds, 3 USTs, 3 to 7s, USTs 7 to 10s, USTs 10 plus, USTs 1 to 3 years, and they're actually a little higher performing than some of these other ones. That's the inversion kind of. You got agency debt, agency mortgage-backed securities, agency-backed securities, corporate non-financial, IG. You got CMBS, which is commercial mortgage-backed securities. You got IG Corp Fin. That's getting all my initials all mixed up. That's financial, corporate financial debt there. Emerging markets, high yield corporate debt right there, and then leveraged loans coming in at over 10%. So if you want to park some money, and this is the size of the market, like this, the size of those loans, or treasuries, whatever you want to say. Uh, there's the $32 trillion right there, and this is all U.S. debt, basically. Where's the debt? Right there it is, $32 trillion. $32 trillion right there, spread among all that stuff. Interesting, eh? Um, so there's the 3-month Treasury T-bill coming right there. This stuff down here looked at as more risky. If you park money in those things, this stuff looked at more safe, and that's why it comes in under the Treasury. And there you go. Like, people wonder where all the money is. Look how much stuff's in agency mortgage-backed securities. Big old hunk right in the middle there. Big old hunk. Almost $17 trillion, or $7 trillion. Excuse me, $7 trillion. Look at that. From just over 10 to just under 18, so almost $7 trillion tied up in agency mortgage-backed securities. And yeah, that just kind of impressed me when you look at it this way. And yeah. Anyway, any questions you can ask me in the chat. I think what everybody's here for is the market update, right? Everyone wants to see what the market. This is kind of like this chart. Are we historically bearish this week? Yeah, we're historically bearish this week. So kind of sets a bearish tone on the week. That's why the thumbnail and this guy right here, this super bear, I kind of made up with AI last night. I put him on the screen because, set the expectation a little bit bearish today. So hooking back over to all our favorite charts here. Luckily, TradingView syncs them all for me when I click the little link here and save the stuff. Well, look where we are. Look where we are. We're hanging right here. The 4 scenarios. Scenario 1 was just popped to this 1618. We didn't do that. We've been sideways. Scenario 2 was we churned sideways and then popped the 1618. Scenario 3 was we retraced back to the breakout level, where we broke out from July high and then popped the 618. And scenario 4 was we just retraced back toward the roadmap line. Well, at this point, we have not done anything but go sideways. So it's tipping the odds that we do this and that before we do a bigger correction. Like that. Now, could we just keep going? Sure, we can always keep going. So just keep it in mind that the market's kind of telling us we may just churn sideways, and this could last on through February, like that we just kind of churn in this range right around that 1272 level at 47.18. We just churn in this area for another month before we pop that and then drop it. So just keep it in mind, the roadmap line on the daily, and if you want the roadmap line, links in the description. That's the thing for $5. The roadmap line is going to keep coming up higher and higher, so it won't take as big a correction to flush this thing out and kind of reset everything. And then we'll see where we get to. So right now, JT's expectation just kind of sideways churn. Like, that doesn't mean we're not going to churn in a big range, because that goes all the way down to about, we can stay in the range all the way down to about 4650, and we're still in the range all the way up to 4800. That's like 150 points. That's a big range to be chopping around in. But that's kind of what we're set up for right now. Probably something like this. Where do these boxes come from? Well, kind of set this range and this expectation already. Could we go a little higher? Yeah. Could we go a little lower? Sure. Just hanging out there, churning, winding up some energy. The market takes energy to make moves. That took a lot of energy. This is going to take a rest. Could be all the way out to March even. That would suck, right? Just churn right here. I don't want it to churn till March. I'd love to get a flush out and go, but let's be honest. Like, one of the 4 patterns is to go sideways and then pop. So that's what it looks like we might be doing. Unfortunately, I'd love it to go ahead and flush this out, but that's just not what we're getting right now. So, yeah, I have to be in the face of new information. you need to revise your expectation. So the new information is the fact that we've gone sideways since we got up here in mid-December. Here we are a month later, and after doing that for 2 months, it's probably going to take 2 months to possibly even 3 months. This took 3 months to flush out. Could take us 3 months, or even 4 months to charge back up so we can start moving again. How many people are going to get chopped up in the market if we just turn in a 150-point range for 3 months? I mean, I probably will be. That's not what I want to see happen. So just be aware. All right. I don't hear anybody talking about the narrative. We may just chop sideways for a couple months, and nobody. So that may be the big surprise. Welcome to the party. Anyway, there's the ES right there. Look at the overnight action. A little bit soft. And actually rejecting the 30-minute roadmap line, it sets the tone a little more bearish for today, for immediate, until we break back above that. Yesterday, you can see we were just kind of hovering into the close. Then when we restarted last night, we got a little bearish. So yesterday we were just kind of chopping sideways in here below the high of Friday. If you didn't know the market was open, welcome to the conversation. We closed at 1 p.m. and it opened Sunday at 6. We closed at 1 p.m. and then reopened at 6 p.m. and got a little more bearish. And now we're below the roadmap line on the 30 minutes. The roadmap line does readjust itself for whatever time frame you're on. So this is the 30-minute roadmap line, not the daily. Don't get confused. But we're hanging out right below that. And, well, same pattern as always. Like, the expectation would be if we get below this level right here, right around 47.90, that we may see a push on down to 47.80, possibly 47.70, right down in that area. And that's the futures. If you've never looked at futures before, that's ES1 exclamation point. It's the same thing as looking at the SPX, except it trades all the time. And SPX just opened up, showing up to be a little bit bearish, and we may go for, we are above. So this is a conflict between the futures and the cash index, that we're above the 30-minute roadmap line on the cash, but we're below it on the futures. Now, something I added to the list. For those astute right here, you may notice I've got the S5FI right up here. We've come back down close to 80, but we have not broken below it. Now, I added something new. That was the stocks above the 50-day moving average. For those of you that are new here, maybe don't know, S5FI, that's the ticker. It's an index, an index, a market measure. It's not something you can trade, but it's stocks above the 50-day moving average. I use this as a gauge. It's almost like an indicator of the market because we oscillate between the top and the bottom. All right, the market loves to go to extremes. We're at an extreme on the top. Now, could we just turn and chop sideways and watch this thing hang out up here? Yeah, we could do new things that we've never done before. I mean, that's always possible, but typically we do the same thing we've always done. Now, I had this new one, S5TW, stocks above their 20-day moving average. Now, look how different this chart looks right here. Look where we are. Look where we got to on Friday. All the way down here below 50. This is interesting. So 20-day moving average obviously moves a little faster than a 50-day, 30 days less, and covers about four trading weeks, not these sloppy 4-day weeks, but I'm talking about 5-day trading weeks. Roughly 4 5-day trading weeks is in a 20-day period. 10 weeks is roughly in the 50-day. So it's not really like a proportional thing, but when you look at it that way, this one moves faster. This one's all the way down here already. If this one gets below here and we're still up high on this one, I don't know. Now, something to note though is that this one's not as clean an oscillator. All right, we got a lot of false starts on this. Like this one was down here, popped up, right back down, popped up, right back down before it went back to the other side. So this one's not as reliable as far as once we're up here, we're going down here. We could come right back up here. and do it again before we go down here. And we did it right, down, back up, down, back up, and then went down. Is that the pattern every time? No. I mean, that one only did down, back up, and really, if you want to look at it, we did down, back up, down, back up, down, back up, down, back up, and then we went down here. So, unless you want to count that as being close to 20, since it got in the 20s, but I don't know. I thought this was interesting. I found it over the weekend and wanted to share it with y'all. That not looking as bullish on this chart, and S5FI definitely starting to roll over. Now, if you want a live chart on this, I think barchart.com will update this live. A little bit delayed, but they'll give you numbers during the day, whereas TradingView will only give you a new bar after the market closes. That's what this E is, end of day. They only update end of day. Just throwing it out there. So NASDAQ futures made a lower high. Why NASDAQ futures? What the heck, JT? That's QQQ. ES is SPX and SPY. NQ1 exclamation point. That's NASDAQ futures and made a lower high. And it would not surprise me. We've had the big arrow, and not going to surprise me one bit if we see this roll over further. Can the NASDAQ roll down without the ES moving much? Yeah. Everything's possible, all right? But this does give me caution. This is a little cleaner. Now, this one's not as clean. That's kind of like a triple top situation going on right now. Top, top, top. Maybe getting close to creating possibly a head and shoulders even. Now, look at that. Shoulder, head, shoulder. It'll be way on down here. But that could be like that shoulder looks more, it's more like shoulder head, but oh, look at that, puts us right down near the roadmap line if we finish that up and actually completed it. Kind of interesting, eh? Interesting. So that one kind of has it too. That would be another shoulder head situation, I think, since this one's going to be like the biggest one by the time it gets down there. So we could see a flush out. Now, does that have to play out? No, they're not terribly reliable patterns. They tend to work when we top in the market, but usually what you see is something more like, whoop, I clicked the wrong thing. Let's clean this up just a little bit. Usually you see it kind of more like this. Either flat or somewhat ascending sometimes. We see it like this, where the neckline's like this. Usually we don't see the neckline descending like we are right now, where they work out. So just throwing that out there. The head and shoulder is just a pattern. Doesn't always work, but when it does work, whoa, buddy, it works. Like we saw that work out on Mora, and that was like a year-long pattern. If you have no idea what I'm talking about, look over here. That's head, shoulder, right there. We were descending, but we're in upside down one, so inverse. And then this move right here on, I got to put it on the log scale and clean it back up. This move right here, right there, boom, right off that neckline break. And we topped out right there. Right there is where we topped out. That's why all those arrows were there. And it was pretty beautiful. Why did I think we were stopping right there? Because that head and shoulders pattern. And nobody was talking about that head and shoulders pattern. So my theory on head and shoulders patterns, the more, like if you see it in the mainstream media, like if CNBC is talking about the head and shoulders pattern on the S&P 500 or whatever, it's not going to work. It's going to fail. So the more people talking about it, the more it's probably going to fail. That's kind of my theory. Russell, this is small caps IWM. Looks like she's coming right back down here to the roadmap line. And we may get, at this point, look out, that was a monster run. We could see this even retrace a little deeper right down in this area. So expecting a retrace into this 1870, possibly 1800 area. Find some support on Russell. If we can hold that kind of area, potentially going higher. If we don't hold that area, we could be down here at 1500. So be careful. Let the market prove it to you. Don't just jump on stuff. All right. Oil keeps churning in this zone. Yesterday we were looking a little bearish. Today, just a green doji and staying in the zone here until we break out. More down. We're just sideways, similar to the S&P. What would I expect? Sideways. Sideways is my expectation right now. Gold, kind of same thing. Like we set a giant range here when we popped that in December, and then dropped that just 10 days, 9 days later in December. We set a giant range, and now we're just consolidating in the range. We can just keep going sideways in that range. That's all inside candles at this point. I mean, you jump up a time frame. Look, 2 big candles. You jump up to the weekly. Maybe 1 giant candle on the weekly, and we're just making inside candles. No direction on gold. And if you're unfamiliar, GC1 exclamation point is the gold futures. Like that's yellow shiny metal gold. How do you trade it? Like GLD. There's like a million ways to trade gold. So try to get the gravel out of my throat. Bitcoin. Cruel mistress, right? We saw flushing on the ETFs. I talked about this pretty in depth yesterday. We actually saw those ETFs buying. They actually stocked up on their Bitcoin right here. Now, right here today, we're seeing a little pop. And this is actually, you have to kind of go to the spot market to actually see this a little more clearly. We saw some buying happening. I was seeing reports that BlackRock cut a deal to add about $1 billion to their share offering. Like that, I guess it was I don't know, private offering or a pre-cut deal, whatever. Somebody wanted to buy about 1 billion shares of their new ETF. Well, when that happens, they've got to go buy the Bitcoin. That may be what was happening right here. Maybe. I'm just speculating. I don't know for sure. There wasn't a giant volume. And this is Bitstamp, so BTC USD. We'd have to look at Coinbase. And there was a volume spike, but not a giant volume spike. Right there. Volume about 10,000 Bitcoins. So we did see some price pushing higher. Now, there's no centralized exchange, so whichever exchange you look up, that's the volume for that exchange. I had a Bitstamp a minute ago. That was just Bitstamp's volume. There's nobody that, if you look up an exchange, you're like, oh, there were only 10,000 Bitcoins exchanged hands today. That's probably just at that exchange. All right. They're all like islands. There's no centralized accounting for volume. I use futures because they are sort of a centralized, but it's just the futures. It doesn't actually count Bitcoin. So keep it in mind what I'm looking at. Futures are a certified price, so I tend to stay here. And these are Bitcoin futures, but they don't trade. They stop trading on Friday evening, don't trade Saturday, and then they pick up on Sunday evening. So we miss out on a little bit of the price action that you might see in the spot market. But this is a certified price, so you do get some gaps when this futures market is closed. Ethereum, interesting here. I think we could see a rally up into this 3,400 resistance, but those two topping tail type candles right there may indicate that we're done for the current move. That may have been the excitement, that may be all there is, and we may get a bigger retrace at this point. So watch out. That 2670 area right there, that 618 level, could result in a bigger pullback. We could go visit the roadmap line. And if that doesn't hold, we could see a lower low actually, because this price action here off the lows from back in 22 looks kind of bearish. Be careful. All right, it's kind of sloppy and overlapping and not constructively bullish compared to what Bitcoin's been doing. Dollar is rallying a little bit, which supports some weakness in the stock market. These things are correlated when they're correlated, not when they're not. I drew a big target, and we've only got about 50 cents to go to get there. So we'll see what happens here. If we reject this area, we're probably going on down. If we break through, we may come on up here and retest this area, which I need to update that slightly. And maybe this area right here at this point. And that, yeah, I talked about this in the in-person meeting last week, that sometimes the 618 comes in at a logical place. That doesn't really look logical for that to be right there. So this low probably may or may not be the actual low. We may pull that low on down like that. That would look more like a logical support resistance spot. So we may actually see the dollar dip a little more. But it doesn't have to. It can just retrace and do what it wants to do. All right, things actually moving today. Microsoft getting a little pop, getting an extension, pulling out. It took the crown as the biggest company in the world on Friday, and trying to continue its lead. The next resistance up there at 401. This one did what I was talking about. It bounced off the 1272, retraced, found support at the breakout level, breaking out above the July, and now pushing up. And I would expect it to come up in this 400 area right up here somewhere. I don't necessarily expect it to hit 401.65, but somewhere right in that zone, probably. Anywhere from like 398 up to the 404. Give it a little fuzzy zone. These lines should be wider than they are in my book. So I think we could probably see that tagged before Microsoft gets a bigger pullback. AMD extending the lead here, pushing on up into that zone. 150 was my expectation for as high as we go, but proven we're going to push a little bit higher. That fib line actually hits at 157.64, and it looks like my office computer was trying to take it back over. And watch for that resistance. We could turn down this. This would be a fifth wave up, and we could see a larger retrace for a long time on AMD. HMST, nice try to break through the roadmap line. Probably going for that gap fill. Gap fill right there. Watch for that resistance. It may fill that gap and then turn down again. This is coming up off the lowest low. Very overlappy. That's not really bullish kind of price action so far in my book. It could be, but it's not very clean. So be careful right there on HMST. NXPI. This was up pre-market. Now it's obviously not up. And this is looking, we're starting to get a 5 down. So this could result in a first move down right here, a retrace to potentially a 618 level, high to low, right in there, and then a third move down, something like that, potentially matching the first move down, so maybe a little smaller, something like that. That could be NXPI for the next, couple of months. See what happens. Golly, excuse me. I start purring and I cough. ACLS popping pre-market here, up $3 for the day, but that chart looks pretty gnarly. Be careful. That's below the roadmap line. Can we go lower? Yeah, we can go lower. We could go a lot lower, actually. So be careful on that one. That went on a monster run and looks kind of like a 5 up. How far could she go? How low can she go? I would expect support. Get my words right. Support probably in this area. We may find some support somewhere down in there, so this may continue on down. Hasn't really done a 3-wave type correction. It's just, so this actually could rally up like this and then fake everybody out and do that. That would kind of fit there. But it may go a little deeper on this move down till that's about right there. Yeah. A little bit gnarly. I don't know. That's unclear at this point what we're going to do. Could be on the correction. I mean, that could just be the correction, but probably heading a little deeper on ACLS. W, Wayfair has never had what I need. Um, Sideways. I don't have all my graphics, for dumpster fires and all the warnings, but that just looks sideways, doesn't it? I mean, look. Would you expect it to do anything else? Would you expect it to do anything else except turn sideways? Kind of have this uptrend going a little bit. Got this flat thing going up here. Just fill out this triangle-y thing. Yeah. Hey, Arthur. WDC actually looks like gonna break out potentially. Look at this thing. Let's zoom out to a weekly chart. Look at this downtrend. This is a wicked downtrend here. I gotta warn you. Definitely gotta warn you. Be careful. Like, we spike out and then we get slammed all the way back down to the bottom of this thing. We've been out once, twice. Probably find some significant resistance. That's, short-term bullish to come test this thing, but that's a long-term. I mean, this thing topped out in 2015. This is not like I just pulled this thing for a couple of weeks. This has been a bearish, triangle-y, overlappy, gnarly thing for years, almost a decade. Be careful on that. NVIDIA wasn't moving pre-market, so it's probably not on the list. I don't see it. Remember, the request show is tonight. Elab, tonight, 5 p.m. Come see me. Make sure you set a reminder. Elab, low price stuff under $10. Chinese stuff, low price stuff, leverage stuff, biotech stuff. Those things tend to not follow my patterns as much. And this looks like an IPO, which is usually bearish, which goes lower than the start price, which is what we're seeing popping up. We may see this go on down. There's no history, no chart, no nothing I can do. I use technical analysis, so look at that chart. It didn't tell me anything. Jumping down to a lower time frame doesn't help me trade it. I don't like to play that game. Like, let's go down until we have enough information. Let's not. ANSS looks like we're going sideways. Very slight uptrend bias, but mostly sideways. MSTR, getting so close to the roadmap line. If we don't touch that, it's going to miss a great opportunity right there. That is really close. Now, I could almost count that as a touch. Almost. Not quite there. We still got a little bit. Don't be surprised if we see that jerk down one more time. If we do that, sets up this whole thing. Like, I should clean off some stuff, and I swear I've cleaned this off before. Hit that target, hit that target. I feel like I've done this on the live stream before. I think TradingView helps me out and restores all my drawings. Clean up, clean up, clean up, clean up. Clean up, clean up, clean up. There we go. I didn't want to remove everything because that 618 level is kind of important. And right here, if we go from here, we're right up in that zone. If we go from all the way down the roadmap line, look. We see what comes together there. That 1272. So watch for a bounce somewhere around 450, 460. We may get a green day or two and then push on down. That was kind of a wicked little spike in there. Be careful. Could we just bounce from where we are? Sure. That's entirely possible. So Boyle is continuing to flush down the toilet. If you didn't know, there's a bomb cyclone in the U.S., but looks like we're going to end it, and we're going to be back in the 60s next week. that was probably the end of natural gas's run higher. Watch out for this thing to end up down here. BA continuing the march. Oh, look at that. Did I know they were going to lose a door off of one of their planes? No, and have all these problems, but I drew a big down arrow a couple weeks ago, back in December. Watch out for the support zone. Might get there faster than I even thought. So watch for this. Can find support anywhere in this zone right here. Could bounce at 70, 180. Could come down to 160s, 150s even. So watch for that. Don't buy the knife. Goose, my man, loves to buy the knife. But what does that mean? It means when you see these big red candles and you're like, knife catch. But then sometimes you lose your hand because the knife's pretty sharp, and then you're squirting blood everywhere, and your account's bleeding out. And when you think about it a minute, you'll understand what I'm talking about. So if that thing keeps on cruising down, do you want to be holding? Hey, Rongamer, did you make it out to Tesla today? Baidu. Oh, starting to wreck my pattern here. This is not what I wanted to see. Back to the lows. Not so good. I'm glad I just have one contract on. Looks like a lower low. We may be resetting the whole setup here. Not so good. Closed Tesla day. You know it's still a lot of snow if we close Tesla. Anyway, speaking of Tesla, look at where we are. If we get just a little bit lower, below that 207 area, this area becomes the likely target. Been waiting for that. Been waiting. And that's a pretty vicious drop, so we may get a little bounce back up. Maybe even as high as the roadmap line, intermediate wise, before we cruise on down. So watch out for a break of support. Could indicate we're going down to the 170, 180 area. Down here, lower low than what we saw in October. Still bearish on Tesla. Still short via TSLS and TSLQ. Still waiting. Still waiting. Apple, yeah, right back to the roadmap line. False start, penalty. Back to the roadmap line. I don't know. Not really going anywhere so far. Didn't trigger the entry long. Didn't trigger much. So I was aggressively long looking for the gap fill, but getting my hand slapped a little bit. Right back to the bottom. Not making a lower low yet, but my alert's right here. 178.50. Got to get above all this stuff, up above 195 to go long on a conservative basis. So right now, Apple just sideways. Just sideways. All right, PDD, sideways. Down a little bit. We're into the stuff that was down this morning. PDD down a little bit, but just kind of expect it to churn sideways. It's kind of like the S&P, churn sideways until we meet up with the roadmap line. LABU, biotechs. I'd play the biotech thing. Biotech warning, but watch out. That's resistance. We can turn down and make a lower low. I mean, do you want to mess with something that's been dropping for years? And what makes you think biotech's all of a sudden pulling the rabbit out of the hat with money getting more expensive? I mean, I don't know. If they couldn't make it when we had zero interest rate policies, why are they going to make it now? Be careful. 5 below, sideways choppy, gnarly crap. TPST. That money leaving the financials on the back of earnings. More financial earnings this week. Let's see if I can pick that up really quickly out of the. I've got it pinned to Discord. Just 1 second. And open in the browser. Here we go. And we're going to have to zoom back to. There we go. So Tuesday before the open, we had Goldman Sachs, Morgan Stanley, Applied Blockchain, looks like, PNC Bank, Mercantile Bank, First Bank, and Gantry Bank and Trust. After the close, we have Interactive Brokers, Progress, and so more financials is the name of the game here. Alcoa coming in here, Kinder Morgan, Discover Financial. We're seeing semiconductors coming in before Thursday. So we're going to start seeing some earnings pushing things around. There's a Tennessee bank right there, First Horizon, used to be First Tennessee. And so we'll see, we're seeing these financials kind of wrapping up this week, and then we'll see money flow from financials into tech, usually, after the financials get wrapped up. So back to it. So what does that mean? We may see money flowing out of financials, out of banks, before and flowing into tech, not before anything. That may be the name of the game here. So FAS is bigger. Yeah, we're seeing that money flowing out on the back of. That's a typical pattern. See money flowing out. It's probably flowing toward big tech, but which big tech? Looks like Microsoft is the big tech winner, not Apple. And Google. Yeah, Google's a winner. So we're seeing money flow from financials into Google, Microsoft, Meta. Apple's not, is kind of, Apple and Tesla kind of the laggards here. Amazon, even seeing money flow into Amazon. So, all right, moving on. PALL. Ooh, that one looks pretty gnarly. Probably going lower. How low does she go? 78, possibly 71. AZN, AstraZeneca, just churning sideways, lower highs. Back to the roadmap line, false start. PNC, reporting some earnings, not doing so hot. Probably back to the roadmap line. JPM, wicked pop. And now, do we go to the roadmap line? Quite possibly. I do have a higher target on JPM, but that was one wicked move up, and we probably need to retrace that back down here. So let's clean this up a little bit. Throw some better targets on here. So after this ferocious move up, yeah, back to the roadmap line would not surprise me one single bit. Back in that zone. It's not even far to go at this point. DEO. That looks like it's going in the toilet. Dumpster fire. That's just a big downtrend. I mean, look. It's not necessarily going to zero, but that, don't mess with stuff like that. You know, why do you want to trade that? Like, it just looks absolutely gnarly. So, absolutely gnarly. Morgan Stanley, almost done for the list today. Morgan Stanley, that looks like sideways choppy corrective crap. Remember, anybody that was in my in-person event, like that, just zoom out and look at that. Why do you want to get involved in that? We picking bottoms? Not yet. If this holds a 618, we could start looking for something. But right now, that's gnarly. And then DEC, yeah, that's going down in a blaze of glory. Reverse split. That one's definitely a dumpster fire. Look at that. We were okay, and then we're accelerating into the abyss. The zero's down here somewhere. Be careful. They can go to zero. They don't have to recover. That's pretty bad. Pretty bad, especially for energy. I mean, whew. All right, bias for the day. Kind of expecting a bit of churn here. Looks like we're going to set the expectation the rest of the week to be a little bearish. These bank earnings probably not going to help us. May go back to the bottom of this range. If we start breaking below the range, though, watch out for the roadmap line. So, between this one and this one, everything's kind of starting to point us down. Yeah. And smash that like button if anything I said today was helpful. If you liked anything, And remember to subscribe, and because I'm going live at 5 p.m. to take 30 minutes of your requests. So, same bad time, or same bad channel, different bad time, 5 p.m. Eastern. You know, that's what, 7 hours from now? Come hang out. We will do some market analysis on what you want to see instead of what I found. So I know a few people were throwing in some requests, so we'll hit those tonight. Come back and see me, and we'll have a good time for at least 30 minutes. Bye for now. Have a great day, everybody. I'll see you later. The account you saved.